Let me bring on board Mr. Naresh Karia, CFO with RBL Bank. Naresh, good morning and thank you for joining us. You know, even though economically speaking or looking at the macro numbers, it's difficult for me to make a case for a rate cut. Because rate cut, at least in last 2 years, has not kick-started the economy. So why do you think there is this widespread obsession with another rate cut in today's credit policy?
See, first of all, good morning and thank you for having me here. Just as a backdrop, the Monetary Policy Committee looked at the situation in the last December policy, and they basically looked at, what is the impact of demonetization. Is it going to be transient? Is it going to be long term? Things were not sure at that time. They were also concerned about the commodity prices, particularly crude oil and, the US policy and, overall growth situation. There was surplus liquidity in the system which got injected because of the demonetization. So considering all those factors, there was a kind of pause taken at that time. Now, if you look at the situation since then, there's a positive thing you can see across in all these parameters. I mean, US, there was kind of hardening of yields that happened, and then a little bit of softening we have seen. Dollar also rallied a lot, and then, again, kind of came down a little bit, maybe settling down a little bit now. So, even oil for that matter, there is a kind of leakage in the OPEC that people are expecting and seeing. US oil production should also counterbalance. Therefore, oil probably will not shoot up as much as people thought. So with these factors, there is probably a small window that is available for MPC to take an action for kind of cutting the rates. Probably this is the last opportunity before, and also what it will do is that in the times when growth is not coming back soon, there is a need for pushing the recovery up quickly because of the demonetization impact that was there, which is also reflected in the economic survey, as well as we probably expect RBI also to kind of reduce the growth estimates. With all that, there is probably a chance for doing a 25 basis points rate cut.
Naresh, hi, morning. The street seems pretty divided on whether or not today is going to be a 25 bips rate cut or not, and more importantly, the quantum of rate hikes that we could see from the RBI for the balance of the year. What is your own sense? If indeed it's a 25 bips rate cut, is that going to be it and then a full stop for the rest of the year?
I think my reading is that as of now, the circumstances suggest 25 basis points cut, probably not beyond that. There is obviously RBI and Monetary Policy Committee will take decision based on data that is available in future. If some of the factors that I mentioned, which is the US currency, the growth situation, oil, and whether the pullback of the money from the banking system starts happening at a certain pace once the restrictions on withdrawals are removed, how soon that will impact the inflation and how much it will impact. Some of those are the parameters that MPC would look at it in future. So as of now, I wouldn't go for a rate cut higher than 25 basis points in the near future. After that, we will be kind of looking at some of these parameters before we can take a call.
Are there higher risks? Are there risks to some high inflation post April? I mean, a lot of people talking about the payout of the pending increase of housing allowances, lower interest rate differentials, so on and so forth, all to lead to maybe the second half of calendar year 17 having a slight risk of an upward bias. Would that also play on the RBI's minds, if not for this policy, then for the year ahead?
See, policy measures do have lagged effect, and therefore some of these factors definitely will have an impact, which is why in my previous comment also I said that as of now the window seems to be more like 25 basis points. Beyond that, probably some more if these factors don't play out as in throwing up very high inflation, and for that matter oil and dollar etc. position is kind of not as bad.
Okay, so Naresh, what does all of this do for you, for the banking space at large, for RBL as well? Banks by and large, at least the well-managed banks, have been cruising along. Demonetization or not, I think the quarter has thrown up some very interesting results. Assuming there is a 25 bips right now, the commentary is not hawkish by any stretch of imagination. What does it do? What does it do for banks?
So liquidity has been ample. RBI has also been saying that they want to maintain accommodative stance. In the past they have been saying that. Corporates per se, the demand is not picking up as much, while banks have passed on a lot of cost benefit that has come about. What this possible 25 basis points cut could do is that it will show directionally that the downward fall in the borrowing cost should continue in future as well, and banks also should be encouraged by that, and that will give impetus to the recovery, which is otherwise kind of struggling a little bit. So in that sense, definitely it will be a positive for banks, and for that matter the economy per se, from borrowers perspective. And wholesale rates, the markets are already kind of at a certain level based on the liquidity position that is there. So a rate cut will only align things to that, and therefore directionally it will say that okay, as regulators we are also kind of supporting this kind of move, and in that sense it will be positive for the banking space, because they'll be able to kind of put out more assets hopefully. The consumer sentiment is actually at the retail end is kind of moving slowly towards buoyancy because of the recent rate cuts that have happened from the banking sector, and it will only support that further.
And Naresh, where does RBL as a bank lie in the piece of the pie? Because you aim to grow your advances book to 30-35% CAGR. Is this kind of growth rate possible in the current economic scenario?
So, see, we have always said earlier also that, we are growing off a smaller base, and for the kind of capabilities and the kind of business verticals that we have put together, the growth is going to be naturally happening for us. There is obviously market share shifting that is also happening. So, all in all, we have taken a longer term call. We have grown at a rapid pace in the past 5 years, and I think in the coming periods also we have put out guidance in our quarterly earnings as well for a longer term 30-35% CAGR, and I think that is something which is achievable. It is not hinged upon a 25 basis points cut, and so kind of clarifying that. There is clearly the kind of capabilities that we have created, I think that will power us to that kind of growth.
Okay, Naresh, appreciate your time. Glad you could join us. A very flat start for benchmark indices. The market breadth is looking decent. It's not cracking, which is important. But the credit policy coverage starts at 215. ET poll is indicating that 90% of the market participants we've pulled in, they expect a rate cut of about 25 bips. If that does not come through, there could